All right, the Central Bank of Nigeria, in an effort to boost micro, small, medium enterprises, MSMEs, access to credit, issued guidelines for regulations and supervision of credit guarantee companies in Nigeria. Joining me now for more on that, and also the Nigerian Stock Exchange, the NGX, is Dele Akintola, Head of Sub-Saharan Africa Equity Sales at Stanbic IBTC. Dele, good evening to you. Thank you so much for joining us. Should I be too excited?
Hi, Ruth. How are you? You're always excited.
I am, right? Good. It's good to see you. Three days. Good to see you, sir. So 3 days in a row. What do you make of what we've seen on the NGX?
I think, I'm not as excited as you are. But, what we've seen a couple of, blue chip stocks take on some nice value adds. So basically, you've seen stocks like Airtel, you see stocks like Dangote. You see Honeywell flour that have obviously ticked up today. That's what's been driving the market over the last 3 days. So it's mostly been a blue chip rally. It's not something that we've seen across the board. And I think, it's probably justified, given that a lot of these companies have already released their half-year numbers and they've shown quite strong performance. So I reckon that people are just probably playing their hands around those stocks at the moment. So, yeah.
Great stuff. You mentioned Airtel, amongst those other stocks, Dangote Cement as well, and some others. What do you make of, because over the week I've seen a lot of interest in Airtel. It topped the gainers list, I think it was 2 days ago. It was also in volumes as well. What's the strategy behind, I guess, because that also, I think maybe Seplat, the interest in dually listed names. Is there any strategy behind that as far as investor interest? Okay,
so, you obviously know that, there's been a queue where investors have not been able to get the money out of Nigeria. So, what people have decided to do now is obviously buy stocks in companies like Airtel, Seplat, who are fungible. When I mean something is fungible, it means that, it's listed both in Nigeria and London, and the shares can move both ways. So for someone who's probably been on the queue for a while, is desperate to take out some money, happy to buy some shares in Lagos and take it to London to go and flip it, right, for some dollars. So we've seen quite, obviously we saw a decline or a drop in the price of Airtel and Seplat, and that was an opportunity for people to sort of look at the implied exchange rate of moving those shares to London, and decided to obviously start buying up Airtel and Seplat. So I think the rally you've seen in Airtel particularly has really been driven by international clients who are looking for a way to expatriate money out of Nigeria.
All right, and you, as the head of Sub-Saharan African Equity Sales at Stanbic, you obviously talk to clients like that a whole lot. Is the telco space the hottest subsector in Nigeria right now?
I'm tempted to say it's one-off. This year, I particularly like telcos, and I like the cement space. I think that telcos, obviously, a lot of us are working from home. We're using data, we're using Wi-Fi, we're making a lot of calls. We're constantly on our phone engaging. I think that telcos are doing very well, and there's still room for data to grow in Nigeria. When you look at cement, we've seen phenomenal growth. You've seen that a lot of companies are also applying for Build Road for tax credits. So that would be a major driver of infrastructure over the next 3 to 5 years. But you've also seen that there's also been a lot of that going into the private sector in terms of homes as well. So I'm quite bullish on those two sectors, so if I had to prioritize, I would be caught between the cement sector and telcos. And obviously, if you look at the numbers that have come out from MTN, phenomenal numbers. Dangote blew the lights out with the 44% upside on turnover, equally with Lafarge and Bois Cement. These guys have shown phenomenal growth. So,
all right.
Absolutely.
Great stuff. Thank you for that. All right. So how do you think matters will play out between banks and telcos and fintechs with regards to market share, competition, collaboration? How's that going to play out?
I think it'll be a very interesting evolution. I think Kenya has been the model that a lot of people have looked at. And I feel like, Nigerian banks clearly do not like or do not want a telco-led financial inclusion strategy for Nigeria. So I think there is that motivation from the banks, to sort of get in front of the problem and try and solve that problem where you're able to integrate the country. I think that, however, if you look at the amount of clients that in the banking sector, and you compare that to what the telcos have, right? It's going to be a very, very massive battle. It's going to be a lot of work, a lot of investment. So, I think that, I know, giving you the success of M-Pesa in Kenya, look at Safaricom today, you see that there's a massive collaboration between the telcos and the banks, right? They are working hand in hand to help push markets and push the market and push products to their customers. I mean, of recent, Safaricom announced that they would be allowing customers to buy shares, on the M-Pesa app. I mean, that's just phenomenal, innovation happening in Kenya. And I feel like, for Nigeria, we need to start seeing something along those lines. I feel like, the market is there, the opportunity is there. There's an opportunity for banks and telcos to collaborate, to share data, and to win together. I don't think that it's something that one person must do. I think that they have to work together. I think that when you think of, the young analysts of today, the Gen Zs, right? They want to go to work in T-shirts. They want to have tattoos. They want to have piercings. I don't know how they fit into that whole banking space and how they can innovate. And then you obviously have as well, companies like Amazon and the big tech companies also as well stealing our talent. Asking our young coders to come abroad to come and do the same work. So yeah, it's going to be a very tough one. But we'd like to see how that space evolves, and see how the banks thrive. But I still think that it's one where banks and telcos have to collaborate to dig deep into the market and really tap it properly.
Okay, what we're going to do, we're going to take a quick break. We'll continue the conversation here on the Arise Exchange on Arise News. Hang tight. We'll be right back to continue the conversation with Dele Akintola, talking, of course, about a very interesting topic on competition between the fintechs, banks, and also the telcos as far as market share is concerned. So stay tuned. We will be right back. All right, welcome back to the Arise Exchange on Arise News. We're still continuing our conversation with Dele Akintola, head of Sub-Saharan Africa Equity Sales at Stanbic IBTC. All right, Dele, good to have you back. So you gave that great answer, in-depth answer on competition, collaboration between banks and fintechs, telcos. I was asking you before I went to the break about the Guarantee Trust Holding Company and their pivots into payments. What you made of that strategy and whether the other banks will go down that line.
I think it was a very obvious strategy. When you look at the fact that when you look at earnings of the banks, we come to a point where things are beginning to peak. You find that the CRR today is at an all-time high. And clearly the banks are looking for more creative way to create income, and that's not really happening because they're obviously not growing the loan book, given COVID. So they have to look at other ways to to grow that pie. If you look at the Stanbic IBTC model, it's a one-stop financial shop, where you have multiple business segments, wealth, pensions, stockbroking, and I feel like a lot of banks looking at their business 5 years from now, it's saying how can we grow that pie, and obviously that justifies the need to become a holdco. So I think that you've obviously seen that other banks as well are going down that path. You've seen Access Bank also as well indicate interest in doing something along those lines. So I think we'll probably see a few more banks start looking at other things to do, not just payments, just ways to grow the pie.
Great stuff. I want to move over to FX matters, because that was part of your answer when we were talking about investors' interest in fungible stocks, dually listed and so on. Do you think liquidity gets better with the 3.3 billion we're expected to get from the special drawings rights, and then hopefully the proceeds from the Eurobond if we tap in there?
I mean, that puts a smile on my face. So August 23rd, we should get about 3.4 billion from the IMF. That is, that would obviously hit your reserves directly. And obviously the plan for the government to also do a Eurobond, $5 to $6 billion. So you can easily see the reserves go up or accrete by $8 to $9 billion, right? And today the reserves are 33. So you easily can get about $41 billion by, in the next 2-3 months. At the moment, obviously we know that there's a queue. I think earlier, a few months ago, the queue, out of Nigeria was probably a little bit above $1 billion of money stuck here. So obviously, by the time we get the IMF money and the Eurobond, there's, the CBN has firepower, to take care of those needs and get everybody off the queue. And, what we expect to actually see is that, you might actually see that the black market, even though the BTCs have been banned, you might actually see some appreciation come through there, where there might be a closure between the black market rate and the official, over the next few months.
Great stuff. Now, what do you see USD still at 500 Naira to the dollar levels? I think it was at 515 today is where it closed on the parallel market.
I mean, I'm actually quite surprised. I had expected that, given the ban, that probably the black market would have run faster. But it's testament of the fact that hasn't actually run. So 515 still sort of feels like where we've been, even before the ban has come through. And it also speaks to the fact that the black market is not the depth of the black market is not as deep as you would imagine. And I feel like if people are able to come to their bank and get legitimate dollars, they probably will do that. Maybe also probably get good rates. Obviously, there are the producers who they're the banned items, the 41 banned items, right? Those players would have to figure out where they would get dollars to source or to source and get raw materials. But I think that it's a step in the right direction. It's what I think we should have done many years ago, because I think at some point, based on the data I had, at some point we were spending about $1 billion on PTA and BTA a month. Now, there's no country in the world, or at least in Africa, that can continue to bleed $12 billion for personal and business travel, and you expect that your reserves will hold, or that the currency will also hold. So I think for me, it's a win-win, and it's a positive direction. It's a positive move in the right direction. There are obviously more things that I think we can do to sort of close up that space, but I think it's one step in the right direction. So as expected, we expected that the black market will move away, but I think in the next few weeks that will claw back and find its level.
Great stuff. I want to move to T-bills, money markets. We had an auction yesterday. We've seen rates on the 364-day bill continue to fall, right? It was about, almost 10%. Now, as of yesterday, it fell to 7.35 or so. What do you make of the decline?
I mean, I think it's just a signal, right? A signal that the government is looking to drive down interest rates. I mean, or they don't want to borrow at those levels anymore. I think, when you think of the fact that, the IMF money is coming through, you think of the Eurobond coming through, and so far this year, the government has already borrowed about $1.4 billion already. And this is August. And the plan was to borrow about $2 trillion. So they're probably at the tail end of the local borrowing cycle. I imagine that the move now is to try and see that whatever they want to borrow, right, they can borrow it at cheaper rates, given that they expect that some FX liquidity should be coming through for them. So I do expect that those one-year monies, at least on the T-bill rate, should either keep coming down or at least maybe find its level at sort of 7% level.
Dele Akintola, head of Sub-Saharan Africa Equity Sales, Stanbic IBTC. We've covered a lot. We've got to have you back to talk more. Thank you so much for joining us. Really appreciate your insights, Dele.